Hi, this is Simon with Trade and Perform Coaching doing the trade review for Monday, the 28th of July. This morning was a little bit of a rough open for me. So I'm trying to accomplish a couple of things here today. First of all, from the market preview, the focus was on the long side of the trade, right? Generally speaking, I don't see the market as having coming anywhere close to a breakdown. I think the downside is harder than the long side. And generally speaking, for the prior 4 or 5 days, the rotations down have been minimal, with the exception of one trend day down in the past week or so. So a couple of things are going on this morning. First of all, it is challenging to get back into the rhythm where you're catching all the small nuances and you're not trying to reorient yourself to the pace of the market. So the thing that I found most challenging this morning was that I didn't recognize the pace. I've been off essentially for 2 weeks, and I did not. So when the market pace was slow, I had lost a point of reference because I couldn't tell, hey, has it been slow every day for the past 2 weeks? And I'm just not getting a good read, or has this actually, is this pace and the rhythm of selling, has this actually increased, and is there something new or different here? So the other objective that I'm trying to acquire, the process goal that I was focused on, is not getting buried on my first day back. A lot of times what will happen is when you come back from vacation, A, you're very relaxed. B, I was leaving on somewhat of a high note and had relatively high number of wins. I think I was pushing towards the 85 or 89% win rate as I was exiting for vacation. So a lot of times what will happen is when you leave with momentum, you get relaxed. I'm having an extremely good year, generally speaking, and what will happen is you'll come back from that vacation, and then you'll have a series of either poor decisions or trades that'll just go against you, and you'll get buried and take a significant loss. So my primary objective, first of all, was not to take a significant loss, to get back on track and read the price action as quickly as possible and get familiar with the environment, right? And then, of course, was just to execute my setups, which that's always the trade. So going into the day, first of all, I had missed what was essentially an open drive lower. So let's go over that really quick. Open drive lower is generally characterized by having 3 bars down. It usually looks like this. 3 bars down. First bar tends to be the high bar of the day. There's a little to no counter rotation back up, and we were unable to get gap fill. That's the other part of a trend day down or trend day up that I look for. Now, obviously, there was no gap fill. We opened right at essentially where we closed from Friday. And the other part that kind of threw me there was that for the first 10 minutes, we essentially traded sideways. So when we got that rip lower coming into the econ data, I just simply I didn't identify the open drive lower, and I didn't think it was a true open drive lower. I felt the entire time that we could possibly get a rotation back up. I was not looking short at all, and when I look back at my notes, at first I was a little bit critical of myself during the trading session because I said, well, I should have identified it. But the fact of the matter is that usually the days where we have trend days down, they're usually accompanied by gap downs, and then usually those gap downs have a lack of half gap or gap fill. So I was missing those two pieces of information. Now that's critical because as a trader, you can't shred yourself when the market doesn't set up. Obviously the market's not going to make it necessarily easy, right? And a key component of trend day down is usually that it's accompanied by either a significant gap up and then a failed gap, or gap down and drive lower. We had neither one of those today. So the other part that kept giving me difficulty was the areas of the traps and the zones. So first of all, those are 2 separate trades. I'm going to try to address those quickly. So first of all, I did not identify the open drive lower. I did take this trade in front of econ, which is always adds a risk, right? So you have to consider there was data at 8:45 followed by 9 a.m. I took the trade into the zone. However, where I took it in the zone, I did pause because I did say in the market preview that I thought we could come in and make an attempt for to close this open gap, and we did just that. That's where my focus was, to capture this trade, and it simply didn't give me it did follow this 15-minute rule, but I really thought we were going to get a responsive move. I thought we were going to get this move out of this trade location. So I stayed patient with the trade, and I ended up just simply getting stopped out. Actually, right in front of the econ data, took me out of this trade at 1984 even. I took it at 1966 for a 2-point loss. There's not a lot to say when that occurs. That's part of the risk of taking a trade in front of economic data. It can be frustrating. Usually the first time into an open gap, that's a high odds trade. So I'm not going to give myself, actually I'll give myself no negative marks in that particular area. I followed that trade setup perfectly. Usually when we get to an open gap, I'll want to take that trade, execute it, and stay patient for a rotation back up, because I know that this has a very strong possibility. But where I also got thrown off was that we had this trap trade here that triggered. I did not take this trade the second time. I was actually quite patient. The reason I did not take this trap trade was because I'd already gotten stopped, and we had econ coming out this was formed right when econ was executed. I did take this trade here at 1963.50 even, I believe. My stop was 2 points behind at 1959.50, and I actually was able to attain my 2-point target on this particular trade, which basically put me flat on the day as far as ES is concerned. However, because I wasn't exactly familiar with the environment or what was going on, I did leave a huge portion of the potential beautiful runner on the table. And that's a little frustrating, but I did not chase. The other good decision that I made today, and I apologize if this is a little bit herky-jerky, but it is my first day back, so I'm going to try to make it hit the highlights and make the important points. I did not flip and get frustrated, even though I got stopped here. One of the keys was I did not get frustrated and turn around and take a short into the hole, and I can't tell you how important that was. Even if I didn't have a huge day to the upside, I did not exasperate what was a frustrating series of events and then put myself in a huge hole. A lot of times that's exactly what traders who have a difficult time maintaining rhythm will do, is they'll come in and they'll go, oh, I should have been short instead of long, and instead of continuing to try to work their long idea where they were right, they'll turn around and go, oh my gosh, it's going to be a trend day down, I'm going to miss, and then they'll come in and force the short side of the trade either at the lows of the day, or they'll wait for a bounce and they'll say, this is my opportunity to get short, and then they will end up getting squeezed to the upside. So I've verbally called out in the room that I was not taking a short, that we were back above Globex lows first, and then secondly we had trapped above Friday's lows, and that'll often lead for what? A trade to the other end of the range. Okay, and all you had to do to avoid that scenario, if you took the trap trade, that's fine. I was already struggling significantly with NQ, and I'll go over that in just a second. I did not take the trap trades or hold the trap trades long enough. I took my 2 points and I got out, but I would have liked to have executed this better. It was important to recognize at this point that we were trapped above Globex low, and that saved me a considerable amount of pain. I'll work hard to capture these trades better in the future. The other thing I wanted to point out is if you simply had skipped the first hour after identifying the open drive lower and had moved your trade to 9:30, the first trade that really set up in the 9:30 time frame was this trap right here at Globex low, and that trade actually yielded from 96 all the way up to 76, a 10-point trade to the upside. So I want to make sure that people are seeing that trade, particularly my trading clients, and also to distinguish in the market preview, right? Even if I'm taking a trade in in this location or in this period of time, how do I want to complete this this thought? Even if I'm taking a trade here, it's important that you know what your trade is. For some of my coaching clients, they simply have a rule that if they identify an open drive lower, they don't trade it. That's not my rule. I'm usually able to successfully navigate those waters. So I do trade counter to open drive lower unless it's usually accompanied by a gap down. And then I get a little bit leery. But without the gap down, generally I'm susceptible to getting hit on open drives lower. If your rule simply says, hey, that's an open drive lower, I'm sidestepping the first hour, you have to be able to follow that rule and execute it well for your own trades. For those guys who were able to sidestep this, okay, they were, and you did not start trading until after the 9:30 period of time, the trap trade set up beautifully and gave you a great push back to the upside. I also want to show you another issue. When I was doing my homework, right, okay, one of the things I want to do is see how the rhythm of the market has been operating early in the day. So I'm going to crush this up here real quick. So as I look back over this period of time where I was on vacation, which was basically from the 14th, right? Let's spread it out just a little bit. Almost every single day, taking trades on rotations lower, right, gave you beautiful moves back to the upside. Almost every single day, the market in the AM was providing a beautiful rotation back up, right? Even on gap downs, we had gap down, potential open drive lower, pushed higher. Even after 9 a.m., right, on the on these moves down, right, this is a move from 78 all the way down to 68, essentially a 10-point rotation lower, and gave you a beautiful move back up. Even on the day where today, where it looked like we were going to have trend day down, the pushes back up have been consistent in the AM period. Most of these pushes back up came earlier in the session. Okay, so the reason why this is important is because I'm looking for rhythms and patterns that the market is following, and I want to follow with whatever the predominant pattern, if there is one, is being displayed. Okay, and so when I look back at this analysis from today, I went, well, look, had I been here for the past week and I'd taken that first rotation down each and every day, I got paid like a king back to the upside. So again, taking that loss on that trap is totally acceptable to me on a day like today. And so there's not a lot to do. The key, I think, is simply not to punish yourself if you got caught in this. And hopefully you were taking these trades to the long side on the rotations lower earlier in the week or the majority of last week, and you were getting paid on the upside on all of this. The feedback I was getting from a lot of my clients were a lot of the guys were able to capture these moves back up, and that's fantastic. Let's go over to NQ real quick, and then I feel like I'm just not back in the groove quite yet, and I don't want to kill y'all if you're listening to this trade review. But on NQ, same scenario. So a couple of things. First of all, again, we really opened flat. We tested up and didn't quite hit Globex high, and then rotated down. First move into Globex lows. I actually don't recall if I took the trade into Globex low or if I took the trap. Actually, I do recall now. I took the trap, and this trap stopped me 1 point below. And then again, I took this trap right here at prior day's low and got stopped out a second time. And that pretty much killed my day for me on NQ. It trapped a second time at prior day's low on Friday's low, and that trap was effective. This was a bit frustrating. This will usually pay pretty nicely. If I had not gotten stopped 2 times back to back, I really would have had quite a nice day. And I actually ended up scalping back to for what was the day was just actually down slightly in NQ. I think when everything was said and done, I took one more trade at the end of the day, but down very, very slightly. However, it is very frustrating to get stopped 2 times in a row, right? Have the right setup, and then see the market rotate on the third trap and see it move back higher. This is, again, uncharacteristic of the days that we've had in the 5 days prior. Of course, it would come on the day that I return for vacation full time, and that can be a little bit frustrating. But if I look at all the other prior days, early in the day, there were significant rotations back up, and if you'd waited patiently for the good rotations down, they had been money day after day, really getting great pushes back to the upside consistently, okay, early in the day. And so I'm not going to beat myself up too badly for getting stopped today. I think the key was that it was just an off day. So anyways, I hope this helped. I always hate to do a poor trade review. I'm not sure if this is any better than I was doing this morning, but I'm a little bit rusty. I'll get back into a groove and covering the highlights. The key is if you're a struggling trader, and I want to really emphasize this, if you're struggling to get break even or you're consistently losing, right? What are the keys? All of these trades were pre-planned trades that are all within my parameters to take, number one. Number two, I managed downside very, very carefully. I did not have a huge traumatic down day where I was going, oh my gosh, what's going on here, right? And number three, and very critically, I don't have to make any adjustments for tomorrow. I just simply have to come in and follow my established trade plan. So, and that's important because for traders who are struggling, what happens is they'll come in, they'll have a bad day, and they'll spend their entire evening trying to figure out how to get reset for the next day, right? They'll go in and stare at the charts or look for a new technical indicator or completely wipe out everything they're doing and start from scratch again, so that every day is a total, pretty much a guess, right? The reason that I'm able to stay successful even on days where I get frustrated is because I'm pretty much taking the same trades day in, day out, and I'm usually getting good reads. The win rate that I usually experience is somewhere between 65% and 85%, depending on the time of year, right? What that means is you have to accept that there's going to be some stops in that process. Traders get in trouble when they don't accept the fact that they're going to have losing trades. They only want to find a methodology or system that gives them all winners, and that is simply a great way to get your ass kicked, actually. So anyways, my name is Simon. I'm a Trade and Perform coaching. Please forgive me. I'm a little bit rusty getting back into the groove of things. I will be posting the trade reviews daily, and hopefully they will be getting better. If you have any questions, please feel free to email me at tradeandperform@gmail.com. Or you can send me a Skype message, a message via Twitter or StockTwits. Hope everyone had a great day. Look forward to working with everyone in the morning, bright and early. Thank you.